We got some massive news for stock market investors as there seems to be an escalation in the trade war between the United States and China. China earlier this week ratcheted up the trade war by restricting exports of rare earth materials and then attacking Qualcomm with more trade barriers. In response, President Donald Trump today noted that he's considering increasing the import rate for United States businesses importing products from China, all of which led stock market investors to become more concerned and sent stock prices lower. Major indices are down. So in this video, I'm going to discuss the details of these trade war escalations, and what it could mean for stock market investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So President Donald Trump ratcheted up tariff and trade tensions with China, threatening a massive increase in duties on Chinese goods and suggesting he would scrap a planned meeting later this month with Chinese leader Xi Jinping. Of course, part of the reason why the stock markets have been in rally mode since April, when there was a crash following the Liberation Day announcements of increases in tariff rates, is because investors and stock market participants were feeling comfortable that the worst part of this trade war was behind it. With these recent flare-ups, it now looks like it's not actually behind us, like the pain is still to come. And that's kind of what I've been talking about for the past several weeks. I felt like market participants were becoming too complacent regarding the macroeconomic and geopolitical situation, how we haven't yet begun to feel the negative impacts from the increase in tariff barriers or the increase in trade barriers. And because a lot of the materials and inventories we already had here onshore, and so the new products that are coming in now for the holiday season are the ones that will start to face higher import tariffs, and so consumers will see higher prices when they go shopping. And of course, if you remember from your basic economics class, when prices go up, demand goes down, and so we're going to start to see that negative virtuous cycle, people buying fewer things, and with people buying fewer things, businesses will produce fewer things, and if businesses are producing fewer things, they're not going to need as many people, so they're not going to hire as many people. They're going to let go of some people, and with people getting let go and fewer jobs being created, fewer people will be going out and spending money, which is going to create a further decrease in demand, and down we go into the depths of economic recession potentially. And these kinds of risks, in my opinion, are the biggest risks. So Trump accused China of becoming very hostile, pointing to the curbs this week it took on exports of rare earth materials. And as part of their trade dispute, China also slapped new port fees on U.S. ships and launched an antitrust investigation into U.S.-based Qualcomm. Beijing has also halted purchases of U.S. soybeans, scrambling business plans for U.S. farmers. So all of which points to an escalation in the trade war between the United States and China. Now, many U.S. businesses are heavily dependent on China for imports of goods. A lot of U.S. businesses have manufacturing bases in China or have suppliers that they purchase from in China, and they have had a difficult time replacing that supply chain or diversifying away from that supply chain, going to other areas. Apple famously is diversifying by increasing its manufacturing base or increasing its purchases from manufacturers in India, right? But it's difficult to do this on such short notice, and with these trade barriers and trade war escalating and de-escalating, businesses are really uncertain as to how to proceed. Very difficult for businesses to proceed, even if they wanted to just say, fine, we're going to just produce and source completely from the United States. That's not really a possibility. It just doesn't exist. A manufacturer that can produce the kind of output and scale at cost that you can get from outside of the United States. And if you want to build a new manufacturing facility in the United States, the machinery and materials you need still come from outside the United States. And so you've got to import all of that stuff here, and now with much higher cost. And it takes time for all of that to come here and build and create. And then as a business owner, you're not sure if while you're doing all of that stuff to onshore production to the United States, what if all of a sudden there's a deal while you're doing all that, the US and China agree to a deal that slashes import duties, and now all of a sudden you're at a huge competitive disadvantage because you have your higher cost manufacturing facility here in the United States, while other businesses are now getting to import from China at much lower cost. And so you could potentially be out of business by making that decision. So because of all of that uncertainty, the ups and downs, it's really caused a standstill in U.S. business activity, in U.S. business manufacturing and hiring. And you're seeing all of that data coming out with fewer jobs being created, consumer spending, consumer sentiment declining. And all of that is being masked by a stock market that's just been roaring higher, seemingly ignoring all of these headwinds and just continuously moving higher. So this week and today and the last few days, I think investors woke up to the fact that it's not all smooth sailing ahead. There are significant risks ahead, and we need to price in those risks into the market. And especially on some of the most overvalued stocks that are approaching bubble territory, investors have become a little more concerned and not as enthusiastic jumping into these momentum stocks because they feel everything is moving higher. In my opinion, this is the biggest risk. It's not the risk of a recession. For me, recessions, they're bad, don't get me wrong, but an increase in geopolitical tension could have more devastating impacts than an economic recession. So that's my biggest concern here, is an escalation in trade wars, an escalation in geopolitical tension that causes much more damage to worldwide economies and even worse outcomes as a result of these escalations. So these risks have increased this week. Investors, be aware of these risks. Check your portfolios. Make sure your portfolio is in a position that you feel comfortable with, that you don't have too much risk on, that you have sufficient savings, at least 6 months of expenses, and that your portfolio has a good amount, at least 5% allocated to cash. I would feel more comfortable with at least 10% allocated to cash, so that if there should be a big drawdown in market prices, you have some capital available to allocate to some of the most undervalued stocks trading at reasonable valuations that are not directly exposed to the increasing trade barriers between the United States and its trading partners. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.